This week's silver report, we're going to start with taking a recap as to where we are in the price action of gold versus silver. I believe it is October 1978, and I'll give you 3 reasons why. Why October 1978? Well, because in October 1978, gold was reaching new highs, and then there was a pullback, a major pullback in gold. And what was silver doing at that point? Pretty much nothing. I'll show you the charts. Silver basically farted, and then 2 or 3 months later, by early 1979, that is when silver took off. And after we do a little bit of historical research in the price action, we're going to go to a signal that has just happened this past week in the gold to commodities ratio that has only happened 4 times since 2002. And it has signaled a major bull run, both in dollar terms and commodity terms.
In today's news recap, will rate cut hopes ignite a silver rally? Silver prices remained stable on Wednesday, hovering around the pivot point, which is currently guiding the market's short-term direction. Unlike gold, which is nearing record highs, silver traders are adopting a cautious stance, with little momentum pushing prices decisively in either direction. This lack of volatility suggests that investors are not expecting significant market-moving news from today's U.S. Consumer Price Index report. The modest support for silver prices on Wednesday is largely due to expectations of a potential U.S. interest rate reduction and ongoing tensions in the Middle East. However, the market remains sensitive to upcoming U.S. inflation data, which could influence the Federal Reserve's monetary policy decisions. Despite these supportive factors, low demand from China continues to weigh on the market, potentially limiting any substantial rally in silver. Investors are closely watching the latest inflation data, particularly the core CPI, which excludes volatile food and energy prices. Expectations are for a 0.2% increase from the previous month and a 3.2% rise year over year. The data comes at a time of growing economic uncertainty, with some investors questioning whether the Federal Reserve should have already begun cutting interest rates. According to CME Group, traders are currently split on the likelihood and size of a rate cut in September, though the consensus leans towards some form of easing. U.S. Treasury yields edged lower on Wednesday as the market absorbed the latest inflation data and its potential implications for the economy. A confirmation of slowing U.S. prices could bolster bets on a significant rate cut in September, potentially driving silver prices higher. Additionally, geopolitical tensions, particularly in the Middle East, continue to fuel safe haven demand for silver. Now we'll show you the best clips of the latest interview, but first hit the like button, subscribe to the channel, and check our description for full vid credits. Enjoy the episode.
Where we are in terms of the price action, we have here a chart from Gold Charts R Us. We see that from 1970 to 1980, gold hit a new high finally after the 1974-1975 high of just under $200. We hit a new high by October of 1978, and then there was a big pullback back down to 200 from about 250, 255, something like that. Big pullback by December 1978, and then only after that pullback was the takeoff. So I believe we are somewhere in here. I don't know exactly where. This is October 1978 at the top, the tippy top here. But since we've made new highs in gold for a few months now, or was it weeks? I don't remember how long. Not that long. We're somewhere in here, late 1978, very late 1978, and there's probably going to be a pullback, and it's going to be scary, and you're going to have to hold on, or you don't have to hold on, but I'm going to hold on. And then after that, we're going to enter 1979, and then just pretty much go straight up with some scary pullbacks, but not as scary as this one. I don't know for sure if this is the story, but I'll show you why I think that for other reasons in this next chart here. So this is the same scale, right? 1970 to 1980. And we see here when gold was making a new high at 252, 253 over here, and it looked like it was going parabolic, only to have a little bit of a big bit of a pullback. Silver basically was doing almost nothing. I guess you could, this is like a seismograph. It's like a little fart. So silver basically farted.
What the hell was that?
The highs from 1974 were not surpassed as gold was making new highs in late 1978. Silver was doing pretty much nothing, being very boring. And then only after that gold pullback did silver finally start to take off in early 1979. And then there was a little bit of a rest, not exactly a rest. It was still trending higher until mid to late 1979. And then all of a sudden, there was the parabola of the monetary panic. So my point is that gold makes new highs. Silver doesn't necessarily make new highs until there is a full-blown monetary panic. Silver always advances in the very late stages of a monetary apocalypse. And since this monetary apocalypse is going to be the worst of the last 2 centuries, at least, and I think ever, yeah, we can expect silver to really take off at the very, very end. So once silver starts taking off this time, you're probably going to be too late. You got to get it now. You don't have to. I'm not recommending anything. That's just what I did. Now, this chart is from Gann Global. I am a subscriber to him. I hope he doesn't mind me sharing just one chart from his recent video that I just got this morning. This is just a Barron's gold stock chart from the 1950s, 1960s. And his point here is to say this is a 60-year cycle. He believes in 60-year cycles. I don't really have an opinion on cycle theory. I'm not a technical trader or a cyclist, but I do like to see what they're saying because I just want to know what's out there. So he's saying here that gold or gold stocks until September 11, 1964 would be 60 years ago today, or 60 years ago 2 weeks from now. They started taking off in September 11th, 1964, so that would be September 11th, 2024, which is in a few weeks. We'll see if it happens. We'll see if he's right. I don't know. But it's just another signal that we could be in that 60-year cycle if you believe in such a thing, if you think it's relevant. And now we have a major technical signal here, very rare, that just happened last week, or maybe 2 weeks ago, maybe this week, something in the very, very recent past. And you can zoom in on this chart by looking at the gold to CRB ratio on stock charts. And we have here this signal where the blue line crosses over the red line. That is a golden cross to the 50-week moving average, rises above the 200-week moving average. It happened in 2002 at the beginning of the gold bull market, signaling a gold bull market, not in commodities terms at that point, but in dollar terms, definitely. And then it happened again in 2006, not again until the beginning of the next stage of the bull market in late 2015. And then I checked, did it happen here? And I'll show you that it didn't. There was no cross here. The blue line stayed just above the red line. So the last time this happened was in 2015 at the end of the last bear market. And it should happen now at the end of this bear market, which ended in 2023, at least in gold to commodities terms. So this is a very, very rare signal. And it usually signals long-term appreciation in gold relative to other commodities. And that will obviously translate to dollar terms one way or another. Now, here's that zoom in on that question mark box. You see here that the blue line did not quite cross below, so it couldn't cross back above if it didn't cross below. So to confirm that this is only the 4th time since 2002 that this has happened. Now,
in today's news recap, China's strategic silver takeover, a calculated move to drain the West, China hoarding silver, price 10% higher than West, secret weapon or economic warfare. While the world has been focused on the geopolitical tensions between China and the West, a more subtle battle has been unfolding in the markets. China, through a series of calculated moves, has been quietly accumulating vast quantities of gold and silver. This move has signaled a potential shift in the global economic landscape and highlights the developing countries' need for exorbitant amounts of resources. In addition to its gold hoarding, China has also been strategically increasing its silver reserves. The Shanghai Metals Exchange has seen a significant surge in silver trading volume, with prices consistently higher than those on Western exchanges. This suggests that China may be deliberately driving up the price of silver to drain the West's resources. The rising price of silver could have significant implications for Western economies, particularly those that rely heavily on industrial metals. If the price of silver continues to rise, it could increase production costs for a wide range of industries, from electronics to solar panels. This could lead to higher consumer prices and a further slowdown of economic growth as China outproduces the West in electronics and solar panels. Silver imports are notably increasing under Chinese President Xi Jinping, and most recently have spiked in June and July, with both months surpassing net imports of more than 400 tons. Last year at this time, the net importing of silver into China did not surpass 200 tons. U.S. President Joe Biden and his administration slammed China's trade practices in a memo released in May, claiming its over-manufacturing of solar equipment is harming the West. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Something quick that I just noticed, and I put this on the Endgame Investor on Substack. There's something going on with IAU. That's one of the ETFs. I forgot who. It's not Spider. I think it's iShares, and I think that's managed by BlackRock. So something is happening to that ETF. There was a huge drawdown in the amount of gold in that ETF this week or last week, about 400,000 ounces, something like that. And that's the second most daily amount ever for the ETF. And the first was in October 2023. So yeah, there's something going on in this ETF. I don't know what it is, but when big things happen in ETF, there's something going on, maybe with gold leasing, maybe with speculation, maybe with central banks. We'll see, but it's a big movement. And if there's a big movement, big things are probably happening. And now this is important. There's an article that came out in July 2024 by Nouriel Roubini and others called ATI, Activist Treasury Issuance and the Tug of War Over Monetary Policy. This paper was cited by Daniel Oliver, my favorite gold and silver analyst. And I'm just going to read the first paragraph of the first few sentences just to get you an idea of what this thing is about. Executive summary: by adjusting the maturity profile of its debt issuance, Treasury is dynamically managing financial conditions and through them, the economy, usurping core functions of the Federal Reserve. That's just the first sentence. That's all you need to know. Basically, his argument here, and this actually comes from the Fed itself, or the New York Fed at least, in a paper that was published on August 8th on its website, and confirms that I am right about this. Monetary policy implementation in practice today. I don't think they were responding directly to Nouriel Roubini, but the point here is that it does prove that Nouriel Roubini is not exactly right here, that the Fed isn't complaining that the Treasury is taking over its mandate. And the key paragraph is over here. It says here, usage of the ONRRP. ONRRP is the overnight reverse repo facility, has, as intended, been responsive to interest rates on alternative investments. Following the post-pandemic expansion of the Fed's balance sheet reverse repo facility, usage was large because it was an economically attractive money market investment option and served as an outlet for the abundant liquidity in the banking system. In other words, it prevented extra money printing from leaking into the system or flowing into the system and causing hyperinflation. More recently, it continues, as alternative money market investments such as Treasury bills and private repos started offering slightly higher rates on the overnight reverse repo facility, reverse repo counterparties responded by reallocating money away from the facility and toward other investments. So it's saying, yeah, the issuance of Treasury bills has taken money out of the RRP facility and put it into the money supply. Basically, that's what they're saying. And here's the key sentence. What happens when it runs out? At some point, this is the key. When the ONRRP reaches zero or otherwise stabilizes, reserves will start declining roughly 1-for-1 with balance sheet runoff, all else equal.
What do you think of today's episode? Do you agree with Rafi? Will be a major market collapse in 2025 as he predicts? Will gold and silver shock everyone with a massive bull rally? Post in the comments section down below your honest opinion. Share this video with someone who stacks gold and silver, and watch this one right here because you'll love it, and I'll see you on the other side.